2025 has been the most bullish year in Bitcoin history. Many people are saying 2025 was a bad year because they're focused only on short term price action. And you yourself may have come to the same conclusion. But in this video, I'm going to break down the top 10 most bullish developments for Bitcoin from 2025. These developments are setting the foundation for a new all time high in 2026 and a price as high as $1 million per Bitcoin over the next 10 years. And these 10 developments show that Bitcoin has crossed the Rubicon. It has forever changed from a speculative retail asset into an institutionally adopted asset that is now integral to our entire financial system. Let's get into it. Coming in at number 10 is Square. Square is a payment processing platform that you are very familiar with. It's the iPad that the barista turns around and asks for a $10 tip on your $5 cup of coffee. These are everywhere, and Square has more than 4 million merchants worldwide. The reason this is so exciting is twofold. One, it permanently destroys the idea that Bitcoin cannot be spent anywhere, because now millions of merchants worldwide have the ability to accept Bitcoin. And additionally, they don't even have to like Bitcoin to benefit from its property as a medium of exchange. Allow me to explain. When a merchant activates Bitcoin payments on their Square terminal, they can choose to receive that Bitcoin payment in Bitcoin or in dollars. They don't actually have to hold the Bitcoin. So if I'm the customer and I want to spend Bitcoin, I can go and spend it and the merchant can receive dollars. If they want to keep it in Bitcoin, that's fine. But it opens up the door for a superior payment method because they do not charge the 3% fee that they would with a credit card. Right now, they're running a teaser rate where the fees are zero, and they will increase marginally in the years to come, but that will still be much lower than the 3% fee charged by processing a credit card. The next time someone says Bitcoin's cool and all, but I can't spend it at the coffee shop, they're wrong. If that coffee shop has a Square terminal, you can. Coming in at number 9 is the amount of publicly traded companies with Bitcoin on their balance sheet. At the start of the year, it was 64, and at the time of recording, it is 195. That's more than a 3x increase. That's right. 3 times as many publicly traded companies hold Bitcoin today versus at the start of 2025. This is a major trend to keep an eye on over the coming years for two primary reasons. First is that this will have an impact on the Bitcoin price over the long term. As important as it is for individuals like you and I to buy Bitcoin, companies buying Bitcoin is going to have a 100 times bigger impact on the Bitcoin price. And the second reason is that at some point, if enough public companies hold Bitcoin, Bitcoin will be too big to fail. Think about it this way. This would be a hyperbolic example, but if every company in the S&P 500 held 5% of their balance sheet in Bitcoin, a 10% drop in the Bitcoin price would cause a noticeable impact on the market. The equities of all these companies would drop and the value of the index fund, the S&P 500, would drop as well. Now, we're only seeing this on a microscopic scale with companies like Strategy being included in the NASDAQ, but the principle applies. And as more publicly traded companies, which are in all these index funds and in the portfolios of institutional and retail investors worldwide, then we're going to start to see a stronger correlation between the price of Bitcoin and the price of equities. Number 8 has been a major topic of conversation within the Bitcoin bubble online, but I don't think this has caught enough attention within the broader financial world. And that is Strategy, a company formerly known as MicroStrategy, launching not one, not two, not three, not four, but 5 Bitcoin backed credit instruments. These instruments come in the form of preferred equity called Strike, Strife, Stride, Stretch, and Stream. And I know that is a mouthful, and you're probably like, what on earth is this guy talking about? But this is very important because it is Bitcoin's first major foray into the $30 trillion debt market. Simply put, each of these instruments offers a different dividend and has a different risk profile, and Strategy is essentially replicating the United States Treasury market, but backed by Bitcoin. They are creating their own Bitcoin yield curve. And if you think about it from the perspective of a lender, you're trying to get a high return. You want two things. You want to guarantee that you're going to get back the money you lend to a business and some amount of interest on top of it. Now, historically, lenders have lent to businesses because they're assured they'll get repayment through the services that that business produces and the revenue they generate. Now, nothing is guaranteed in the future. You don't know that this business will continue to generate revenue and profit and be able to pay you back. So there's always some level of risk, and that's why the lenders receive interest, right? They're getting paid in compensation for that risk. Now, Bitcoin credit is a little bit different because, yes, strategy does have a core business and they generate revenue, they sell software, they make a few $100 million a year. But Bitcoin backed credit is credit that is backed right now by hard collateral. And the value of the Bitcoin on their balance sheet is much, much, much bigger than the actual amount of liabilities they have. Basically, the risk you're taking in terms of getting payment back is incredibly low. Now, the market is not pricing it as such, and that's where I think there could be a potential opportunity if you are a debt investor and you're looking for steady 10% returns every year. They can take this debt that's non-callable, right? It's preferred equity. They don't have to repay it at any certain date. They're just consistently dripping dividend payments. They can take that money and go buy Bitcoin. So if they owe 10% per year in dividends on their preferred equity, and Bitcoin goes up 20% a year, or 30% a year, or 40% a year, they're capturing that spread. It's better to buy hard asset with someone else's money than your own money, right? And then that debt gets debased in real terms as the dollar loses value over the long term. It's a very interesting concept, and I recommend you check out the video here where I talk about Strike, which is the first preferred equity they offered. All five of them offer slightly different risk profiles, but if you're curious, the general concept is discussed in this video. Number 7 is Bank of America's endorsement of Bitcoin. Bank of America is the second largest bank in the world, and they hold over 10% of all US bank deposits. They now officially recommend a 1 to 4% they now officially recommend a 1 to 4% allocation to Bitcoin. Now, I personally would say that a 4% allocation to Bitcoin is criminally underallocated and you should have a much bigger position, but most people are not as risk seeking as I am. Additionally, you may be watching this video and be like, I don't care at all what Bank of America, like, why would I take their guidance for anything? And I feel the same way, right? I don't need a bank's approval to go and buy Bitcoin. But most people aren't as free thinking as you and I. And so most people are going to follow the status quo of what the large financial institutions recommend. And now one of the largest institutions in all finance is saying, yeah, you should get some Bitcoin. This is a big deal. Number 6 is very important, and it's a major reason why we saw an explosion in the amount of publicly traded companies holding Bitcoin, and that is the FASB accounting rule change. And accounting sounds really boring, I understand, but this is a really big deal because it changes the way public companies have to mark Bitcoin on their balance sheet. It used to be classified as a quote, intangible asset. And basically, the application of this was you could only mark losses on your Bitcoin holdings on your balance sheet. For example, if you bought one Bitcoin at $50,000 and Bitcoin dropped to $25,000, on your filings, you would have to mark the value of that Bitcoin at $25,000. That makes sense, right? But as that Bitcoin goes from 25,000 to 100,000, you still had to mark it at $25,000 per Bitcoin, even though it was trading at $100,000. This was a major roadblock keeping public companies from adopting Bitcoin, but now that roadblock has been completely smashed through, and we are seeing the fruits of that accounting rule change start to play out as companies can now mark Bitcoin appropriately on their balance sheet. Number 5 is of Bitcoin held in the US ETFs has increased by roughly 188,000 Bitcoin, or roughly $17 billion. dollars. 17 billion with a B. Now, not your keys, not your coins. If you're going to hold Bitcoin, I recommend holding the actual BTC itself and not using an ETF wrapper. But there's a lot of capital in the world that's already in brokerage accounts. And so being able to buy Bitcoin ETFs means they're only a couple clicks away from converting other assets into Bitcoin. And we can see how this has just opened the floodgate of capital. Like I mentioned at the start of the video, Bitcoin used to be a very volatile retail driven market, and now it's becoming slowly more institutionalized. It's not happening overnight, but you can see over the past 12 months a radical shift in Bitcoin's holder base. And it's important to pay attention to because this is going to trade And this is really important to pay attention to because it's going to change the patterns of how Bitcoin trades. Bitcoin historically had these boom and bust cycles where it would go up 10x and then fall by 75%. We haven't seen that since the ETFs launched, and the diminishing volatility of Bitcoin, I think, will become more and more of the case as we start to see ETFs buy more Bitcoin. Now, don't mistake that for a lack of bullishness. I still think Bitcoin's going to be worth $1 million by 2035. But I think the path to get there will look a lot more like 2025 price action, in which we have these long, drawn out periods of consolidation. And it will look far less like 2017 or 2013, where Bitcoin just absolutely explodes to the moon in a very quick fashion. Number four is another major financial institution has capitulated and now recommends Bitcoin, and that is JP Morgan. JP Morgan launched their own Bitcoin linked credit instruments similar to strategy. And this is somewhat ironic for one primary reason, and that is their CEO, Jamie Dimon, has been one of Bitcoin's most vocal critics. Not even 2 years ago, he went on national television and called Bitcoin a pet rock. Time and time again, he has criticized Bitcoin, but don't watch what they say, watch what they do. Again, I'm not a fan of the banks, but they manage a large amount of capital, and there are a lot of investors out there who follow the guidance of these large financial institutions. Number three, and this is not mentioned nearly enough, and that is the fact that Hong Kong has approved spot Bitcoin ETFs. We have seen what these ETFs have done for the American investors. Hong Kong is one of the most important financial hubs in the entire world, and additionally, it serves as the bridge between mainland China and their capital markets and the rest of the world. China is notorious for repeatedly attempting to ban Bitcoin, but it fails every time because you can't actually stop an idea whose time has come, and you can't stop a distributed, decentralized computing network. So, with Hong Kong now having their own Bitcoin ETFs, you can expect that a lot of capital is going to pour into the Bitcoin market through these instruments. Number two is the Abu Dhabi Sovereign Wealth Fund disclosed nearly $500 million worth of Bitcoin holdings. Does it get much more bullish than this? Well, it does because you haven't heard number one, but this is incredible, right? Abu Dhabi is one of the biggest economies in the world. There is a serious amount of wealth there, and they just disclosed a $500 million position in Bitcoin. So while you're freaking out and selling the dip, Abu Dhabi is deploying $500 million into Bitcoin. That's who you're selling your Bitcoin to. Do you think they ever have any intention of selling it back to you? Probably not. And coming in at number one is, of course, the United States Strategic Bitcoin Reserve. This is massive and it has not gotten nearly enough press because people had their expectations too high. People were optimistically hoping that the United States would come in and start smash buying Bitcoin, 100,000 Bitcoin here, 200,000 Bitcoin there, just go on Coinbase and deploy the whole balance sheet. That was kind of the idea heading into the year, and there was a lot of hyperbole around that. But this is still bullish. The United States officially recognizes their 200,000 Bitcoin in their holdings as a strategic reserve. This is huge. This is the largest economy, the largest government in the entire world, and they value Bitcoin enough that they're never going to sell their holdings, and any Bitcoin they accumulate, they're just going to keep it. And they say, hey, we've got this Bitcoin. This is a strategic asset. We're not letting it go. They are giving you the green light. They're saying, hey, this is a valuable thing. We don't think it's going anywhere. We're going to continue to hold it. And they haven't done so yet, but this signals a very high likelihood that they will continue to acquire more Bitcoin into the future. So hopefully you found this video helpful. Don't listen to the haters that are saying we're about to enter a Bitcoin bear market because I think the data is showing us otherwise. If you want to start stacking Bitcoin and you want to save on your taxes, then Bitcoin mining is the way to do it. New guidelines from the Big Beautiful Bill allow for 100% bonus depreciation on Bitcoin mining hardware. That's right, you can depreciate 100% of the cost of mining hardware in a single year. If you have $1 million in income, you could buy $1 million of miners and write it off to zero. Now, if you don't have $1 million to spend on Bitcoin miners, don't worry because Blockware can service any client, big or small. Whether you want to buy one miner or 100 miners, we can help you out. Our Bitcoin mining as a service enables you to mine Bitcoin at our data centers. You get low cost electricity, you get tax savings, you stack Bitcoin at a discount, and you don't have to handle any of the setup or maintenance yourself. You can get started today by clicking the link in the description or going to mining.blockwaresolutions.com/info. Fill out the form there and we'll be in contact and we'll help you get started. Again, that's mining.blockwaresolutions.com/info. If you enjoyed the video, make sure to smash the like button, subscribe to the channel, and leave a comment down below. Thank you for watching.